In today's video, I'm going to be showing you the no BS way to grow a small trading account in the financial markets, whether it is in Forex, stocks, crypto, whatever you're trading. I'm going to show you my belief and my way of growing small accounts right. Don't take the advice of social media traders who tell you that flipping accounts is easy and that trading changed their life, but they'll never actually show you any sort of proof that they've ever done anything successfully in markets or that they even make any money at all. Flipping accounts fast is incredibly risky, and trying to make money quick in the markets, which is highly disrespectful to the professionals in this industry, by the way, is more likely to blow your account than ever to grow them. Some of you guys might have experienced this when you've tried to grow an account very quickly and then blown it all, right? I'm going to show you what I think is the right way to grow a small account. Of course, everything in this video is my opinion. This is not financial advice, but I'm going to tell you guys and show you guys what I believe to be the no BS way to grow an account. And I'm not going to sell you some sort of dream or some sort of false reality about markets, because I am a true believer in, the slow and steady approach in markets, and the slow and steady way can actually be a great way to grow small amounts of money into larger amounts. So let's talk about it. Before I go further, I do want to show you guys, this is a track record of mine on myfxbook.com, which is a third-party site that tracks performance. And this is a smaller account that I've been sort of growing at a relatively aggressive rate. I'm not here to show you, like I said, nothing where I'm flipping accounts in 24 hours or 48 hours. This is months of work here that I've been putting in on this account. But I want to show you that it is possible, and that, I have experience sort of growing accounts. It's not an easy thing to do, but it is something that I believe it is possible. And with time, patience, and a little bit of skill, you can actually grow accounts properly without blowing them in the short term. So in this video, if you stick around to the very end, which I highly encourage you to do if you're serious about growing your small account, which is probably a lot of you guys. If you have a smaller amount of capital, please stick around to the end of this video because I've prepared it exactly for you. In this video, I'm going to show you everything that I know about growing accounts the right way in my belief. I'm not going to BS you. I'm not here to sell you something ridiculous. And if you do like this video and you want to see more of this content, please remember to like and subscribe if you want real trading tips. That's what I kind of base my entire channel on. It's just my experience and no BS, just what I've learned in the markets. So the goal is that most traders want to make extra income with their trading. We all know that. Some traders even want to make a primary source of income from their trading. But we know that all traders, and there's nothing wrong with this, all traders want to make money, right? Making substantial income from trading and investing is impossible. Sorry, it's not impossible. It is possible, but stay tuned, and if you keep an open mind, I'll share with you what I believe to be the best approach. Okay, so here's the problem. So everybody wants to make money, but the problem is in trading, like all other businesses, it takes money to make money. And I know some people don't like to hear that because it's a little bit painful. It's like, well, I don't have a lot of money, so I can't make a lot of money in trading. But stay tuned. I'm going to give you guys some approaches, okay? The truth is that when you don't have a substantial amount of money from your starting basis, then yes, you're not going to make a huge amount of money in the short term. But the bright side is that it is very possible to grow a small account. With proper risk management, a good strategy, and some patience, trading a small account can actually still be worthwhile while you learn the skills and you grow your capital over time. So let's talk strategy. Okay, so the first tip that I have for you guys is, as a small account trader, and actually like in the parentheses there, as a big trader as well, big account trader as well, we cannot afford big losses, but even more so on a small account, right? Because we don't have a lot to lose. So we can't afford big losses. So right off the bat, we need to place the number one rule of growing a small account to be avoiding gambler type trades or all-in trades or giant losses accumulating on the account. So here are some rules that I like to follow to keep this in check. Cut losses quickly. The best way to do that, in my view, is never to risk a giant amount in the first place, and to keep that stop loss on the trade, right? And keep it relatively small. You don't want to be taking a bunch of extra risk that you don't need to take, especially on an account that we're trying to grow and that we're trying to keep drawdown to a minimal. So a good bad example from my trading is that this is a loss that I'm going to share with you guys. So here's a trade on GJ that I recently took. I bought it at a major demand level and it was bullish, and I was bullish on the pair fundamentally. If you watch my streams or you watch a lot of my content, you know that I like to do fundamental analysis on any sort of market that I'm trading, whether it's stocks, currencies, or anything. I just like to know, fundamentally what's the bias on the market that I'm trading. Anyways, for my own reasons, I took a buy trade on the GJ or the GBP JPY. I risked very small and ended up stopping out for a small loss. And let's go take a look at it. Okay, so here it is. GBP JPY on the 4-hour chart. You can see my entry there. It was not the worst entry. I'm not going to lie. It was actually, I thought it looked pretty good at the start. We had a little bump up there. Thought it was going to rally back, and I was just not right. So you can see I took the buy trade. And my stop loss is just underneath structure. This is a very common way for me to take trades is I'll look for a major area of demand. I'll try and give it a buy. If it works, then great, I let it run. And if it doesn't, which is what we're talking about here, I stop out for a controlled loss. And what you'll notice is I'm not here to just show you all the goods. We are all going to hit stop loss. We are all going to take losses. Things are not always going to go our way, and you're not going to get that from me on my channel. I'm going to show you guys the ups and downs of trading. So you're going to hit a stop loss every once in a while. When it does stop out, we don't want it to destroy us. That's the main point of point number one. Don't let a giant loss, because look what happened afterwards. It kept going lower. Sure, it bounced back, but we don't know that in the moment where the market's going exactly. So keeping a stop loss on the trade is very, very important to my risk management plan and to keeping the account under control. The number one thing, the first thing we need to do is stop the bleeding anytime things are going bad. We can't let this account blow up. That's probably what a lot of you guys have experienced and what I have experienced when I was trying to, trade like an idiot when I first got started. Okay, so the number two thing is let the winners do the work. The market has this fantastic concept called asymmetrical returns, where basically the idea is over time, if you look at something like the S&P 500, yes, there are dips, but over the time it has a lot of potential to grow dramatically more than it does to draw down. Meaning, you might have an occasional terrible drawdown on the S&P 500 of 70, 80%, but over time it will go up thousands of percent. So we want to leverage this concept even in our trading. So once risk is managed, now it's time to make the money. It's important to let the winners of our account do the heavy lifting here. Most traders, they cut profits quickly because of fear or arguably because of greed, but it's emotions. How many times have you gotten into a trade, seen a little bit of profit come on, and you snatch that profit because you're afraid it's going to go against you and you're going to lose it? Well, you're probably not alone. There's probably a lot of us out there, myself included, that struggle with this. And I even struggle with it this day. When I have profit on the table, it's hard for me to be like, I've just got to leave this trade. I know, I'm into it for the right reason. I got to let it play out. It's hard. And this is nothing in trading is going to be easy. I'm again, not here to BS you. It's hard. So the idea is to let winners run for as much as possible. Let the market do the heavy lifting if we are correct in our analysis, and keep our risk small, right? It's all relative. We want to keep a small risk for larger amounts of potential reward. Letting winners run methods, part two, I guess, is we want to have a small risk to reward or a small stop loss relative to a big take profit. It's like the simplest version of it. Or if you're like me, I like to trail stops. So I won't even have a target on my trade. I'll just trail my stop into profit. Again, what I want you guys to understand is that there is no one single way to trade successfully. Arguably, there's many ways to make money in the markets. And so I think you should test and do your own concepts. We're going to talk about that as we get further onto the video. But you should also make sure that as a small account trader, especially, we should probably only take trades that are the most promise. That means trades with multiple confluences and strong conviction. What do I mean by that? Well, let's say that you want to buy a certain market, but there's only really, maybe you just like the demand zone, or maybe you just think fundamentally that the Aussie yen will go up, for example. I don't know, right? But you don't have enough reasoning to get into the trade. that's a trade where you probably want to avoid it, right? You don't want to rush into trades. You want to look for, okay, I'm bullish fundamentally on Aussie yen. And then I'm also looking to buy into demand zones, right? And then maybe the RSI dips into an oversold, whatever your strategy is, right? You want to have many reasons for every trade that you take. And you probably should even journal them as you go along to keep yourself honest. At least I know that that can be very helpful for me, just to write down, okay, well, why do I want to get into this market? This, and this. Okay, it's worth an entry for me with a small stop loss. See what I mean? Just take your best trades only. Avoid crappy trades. It's a very, very common thing that people do is they take a bunch of junk trades and then they get themselves into a lot of trouble. All right, so now I want to show you guys a good example for my trading. I showed you the bad. Let's brag a little bit, and I'll tell you guys about this NZD trade that I'm currently in right now. I bought this pair at a major level of demand. I was bullish on the pair fundamentally because the New Zealand dollar is strong in my view right now. Fundamentally, they have talked about raising rates sooner than other economies. We are in a recovery mode from the 2020 pandemic. And so I am pretty bullish on the New Zealand dollar at this time. I can talk more about fundamentals in other videos, but just know, that was part of my reasoning. And then I also bought it at a major demand level, and I liked some of the moving averages as well. But again, a full compass look at why I took the New Zealand yen long. I risked very small though. This is the important part relative to what we're talking about. I risked a small amount and I've let it run here. So let's look at it. Okay, so this is a real account. You can't expect all trades to be this good, and I would not say. You can actually see back here, I took a loss before, so I actually took a small loss there, and then I re-entered. So just full transparency, I'm by no means perfect. I tried to get into this level a little bit early based on some past levels, but again, I'm not going to claim I'm the best trader in the world. I got in, and then I stopped out. And then I looked to re-enter after a little bit of time had passed, and I liked the setup on the lower time frames, and then I jumped in. Anyways, the trade is running nicely now, and you can see that this demand zone did hold very nicely. So this was my entry, and initially my stop was down here. I've since then trailed my stop into profit. But the idea here is that, if this trade keeps going, this has the potential to really help out my account and let it grow relative to that small risk that I initially took. So again, one of the key things for me is letting big winners come into the account and let them do their thing. Let the market do the heavy lifting for me. Okay, so I just want to take a pause here before we go further. This is our Discord for those of you who are interested in seeing the trades that I'm actually taking. It's not a signal service, but I share all of my trades with full analysis and breakdowns and reasoning behind my trades for members. Again, it's not to be copied or anything like that, but if you're interested in seeing my trades in real time, we share it inside of our Discord. We have a team of people and traders who are working inside of our community to make it the very best place for traders. It's not free, but there's actually a promo code and a link down below in the description if you want to check it out. Please don't join it if you have no money. If you're looking for some sort of educational value out of it, then I highly encourage you, give it a try for a month. It's really not that expensive, but don't go broke for it if you don't have any money. So check it out if you do have an interest in seeing more there. All right, so part 3 is realistic expectations. So I joked about some of the social media traders at the beginning, but it really is kind of a dangerous thing that drags a lot of people into this industry, myself included actually. When I first heard about trading, it was like, oh, I want to make money quickly, and I don't have that much money though, so how can I, turn this amount of money into a much bigger amount, right? Well, that preys on the naivety of new traders. If flipping accounts quickly isn't realistic though, what is? It comes down to risk tolerance, patience, and of course, skill in the markets. For me, that means 2 to 5% average per month. Now pause. I know people are going to get annoyed when I say that. Every time I say something like this, every time I talk about what I believe is realistic growth in the markets, people just absolutely, they crap on me, for lack of a better word. People just say like, oh, that's so stupid. You should go for way more. You can do way better. And all they've ever heard though is from the gurus on the internet who show no proof and claim, you can make 20% per month. But there's very few people, if any, that can show long-term success doing something like 20% per month. It's great on paper, but almost impossible to do in reality. Okay, so for you though, it might be different. You might be willing to take more risk, which could yield more reward. Please remember that whatever risk tolerance you have, that's going to be up to you. And more risk tolerance does come with more potential reward, but it also does increase the chance of blowing an account or blowing up. All right. Like I said, but Nick, why even trade for such low returns, especially if you have a small account? If you have $1,000 and you're talking about making 5% per month, that's $50. That's not that much money, right? Well, this video, I'm going to say it again, this video is really for the people who have more of an open mind on this, and they understand that trading is not something that is a quick way to make a lot of money, but that with time, it absolutely has the potential to be a fantastic money-making machine for you. So don't forget the big picture and forget the lie sold online that you're going to make money quickly and that you can make 20% per month, because this is not hopeless. If you can make 2 to 5% per month, you can get funded through a funding program. That can be a fantastic way to get more capital to make that 2 to 5% more realistic, more powerful. And also for those of you who don't want to get funded, but you still want to see, reasonable amounts of money for your work here, compounding is absolutely the answer. By the way, before I move on, funding programs, they're basically prop firms that they will allocate you money to trade if you pass one of their sort of exams. They're trading tests, if you will. You can look into that online if you'd like, but that's a way to get access to more capital if you truly have the skill. But getting the skill is more important first. So let's talk about, if you don't want to get funded, if you don't want to sign up for a program like that, how can you do it just as an individual? Well, let's say you had $10,000 to invest initially. I know for other countries and for certain parts of the world, $10,000 is so much money. But for the US and maybe for the UK, $10,000 for somebody who has been saving and is serious about this stuff is probably not, unachievable ever, especially if you have a job and you're able to build up capital, right? Well, let's look at an example of what's possible with $10,000 in an account. Well, let's just take the low end of that 2 to 5% and say, let's say we average 2% gains per month. It sounds silly, right? But let's watch how powerful this is. And let's say that we make 2% per month and we make no additional investments throughout the time period that we are doing this for 10 years. What happens 10 years later? Look at this. This is so cool. So our initial contribution of $10,000 within this time period, compounding our 2% monthly, comes out to $107,000. That's a huge gain. That's fantastic. And to people out there who only have $10,000, looking at this and saying, hey, in 10 years with discipline and trading success, I could have $107,000. Is that life-changing enough? Maybe not. Maybe for some people, like, nah, I need more than that. Well, check this out. Let's say you're more disciplined with your finances. Example number 2. You have $10,000 initially. You make 2% per month again. And this time you add $200 to your account per month, whether it's from your job, whether it's from, whatever, right? However you decide, let's say you decide to invest $200 per month to this theoretical portfolio. In 10 years, check this out. 2 times as much. You have $205,000 in this account. If you did this for another 10 years, by the way, guys, you'd be sitting on well over $1 million, right? So if that was 20 years out, yes, I know that's a long time. Yes, I know it's not immediate, but what do you want from me? I'm giving you the best answers I can. These are, realistic scenarios that I'm trying to show for you guys that this is what is realistic. This is what's possible through learning the craft and investing the time, energy, and money. If you're disciplined enough to invest X number of dollars per month, your initial contribution, and grow. Some people have more money. Some people could start with $50,000 initially, 2% gains per month, and add $500. And that would cause a dramatic increase. You'd be sitting at, well over $1 million over this 10 period. So again, this is just something that you can play around with. If you look up, compound interest calculator, you can plug in your own numbers and see, what is possible for you if you build the skill and you're willing to invest for the long term. Trading is investing. Trading success relies on, having an investor mindset. Yes, you're being more active, but you're looking for growth over time and being disciplined enough to capture that growth. Okay, so Pretty powerful, huh? I mean, this stuff makes me excited. I think I'm just a nerd, or I'm just geeky about this stuff, but I just really think it's cool to see what's powerful, the powerful effects that money invested and skills in the trading game can do for you long term. Yes, I know 2% is small, but 2% per month on average, that takes into account where you have 5% months up, you have -1% months, you have 4% months up, 0% months. You have to think it's just an average. So sometimes you have better months, sometimes you have worse months. Imagine if you were skilled enough to average 5% month. At 5% per month, this would be an astronomical return over these periods of time. The truth, though, it is very hard to average that high of a monthly return because, again, you have to take into account that some months you're going to be positive, some you're going to be negative, not every month's going to be amazing, and that very few people are actually able to do 5% per month on average for the long term. You can do it in the short term. Sure, you can say, oh, well, this month I made 30%, but long term is what matters. Can you do it for many, many months in a row? That's the question. Fortunately, with compounding our gains, though, we can still do really great in the markets, even with something like 2 to 5%. Time, you guys, is the absolutely most powerful tool to growing a small account. Letting your growth happen over time, especially if you're a younger person with a smaller account, things are actually more positive than you think. You've got lots of time. That's a fantastic, fantastic resource when it comes to investing and trading. All right, so number 4, having a strategy. This is so important, and I probably should have led with this, but when I was making this slideshow, I didn't want to slide all these up to the top. So it's very important. Have a trading strategy, like a thorough, not just to like, oh yeah, I just buy double bottoms, right? Have something written out. Have something well-defined, something that you've really spent a lot of time going through all of the different attributes to create a strategy that will be able to allow you to capture gains, but also to survive the drawdowns that inevitably will happen when you have losing streaks or just times where you're just off in the markets. Okay. Before we go further, I do have a free course on this. If you would like to check it out, it's free on YouTube. You can go look for it. I'll pop it up on the screen here for you. You can check it out and go click that if you would like to watch the strategy design sort of course that I put out. The price of this course, however, you do have to pay for it. I said it was free, but the true price is you have to like the video down below. Yeah, so jokes aside, but if you do appreciate the content, you're still here with me, please remember to like it down below. It does help. All right, so backtesting is free. And this is a huge resource that everyone has access to. Whether you're rich or poor, you have the ability to backtest concepts. And this is basically the idea that whatever your strategy is, it doesn't matter what it is, trend following, reversals, whatever, right? You can take adequate time to backtest your concepts through historical data. Backtesting, in case you don't know what it is, if you don't know what I'm talking about, it's using historical data to test your concepts through theoretical trades. You basically scroll back on the chart and you go through, and there's even some softwares out there that you can look up, like Soft Forex is one that some people like to use for backtesting Forex. But you can go back in time, test your trade ideas, and conceptually see like how well your strategy would have performed once you've defined your strategy in part 4. Okay. Again, this is a lot of work, I know, but if you're serious about trading, this is what's required. If you want to be one of the traders out there who is actually making money, I've never met somebody who makes money, who makes money in trading, who didn't put a tremendous amount of effort in. So I'm showing you guys, again, the no BS, serious way to actually make money in this stuff. All right. Another thing about backtesting is it can give you a decent idea as to how your strategy would have performed historically. It's not perfect because markets can change in the future, but doing this historically is probably one of the best ways, in my view, to get an idea of how things may perform in the future as well. Markets do tend to repeat themselves and do similar things throughout, the time that I've looked at the markets. And another way of thinking this is that backtesting is so important because it's kind of like buying a new car. You should always test drive a car before you buy it. It seems pretty obvious, but not a lot of traders backtest, and I think it's very important to spend the time doing so. All right, another tip, another priceless tip, in my view, is that depositing is the most important part to growing a small trading account. That sounds so cheeky, I know. It's like, well, that doesn't sound like you're growing it through trading. But again, if you're being serious about this stuff, depositing into the account and letting compounding growth work through multiple ways, growing the actual account, but also depositing any extra income that you can. This is going to be the way, honestly, in my view, that, you're going to make the most money in trading is building up that capital. Because again, like we said in the beginning, it takes money to make money. All that BS that you see about, withdrawing weekly from the markets and all that sort of nonsense that you see on Instagram and on YouTube and all the different socials, right? People are always like, oh, I bought this with my trading profits. I bought this new car with my trading profits. It's all noise. The reality is successful traders, they reinvest. They put their money back into things that can make them more money. That's what rich people do. If you want to get rich, don't buy Gucci bags, don't buy nice cars. If you want to get rich people buy assets. Poor people buy luxuries. Whew. Did everybody just have to wipe some sweat off to their brow? Nah, but I'm serious. Really understand that depositing into your account is a great way to really, really grow it. And I want to tell that to more people that, maybe out there who are like, oh, I just want to, I want to make money so that I can go buy something nice. It's a mentality that keeps you stuck. If you want to grow an account, you've got to plant the seeds and you've got to water it and let it grow. If you withdraw, you are hurting the ability for your account to naturally compound. If there's less money in it, going back to that one of those first slides, you need money to make money. If you're taking money out of your account, you're hurting your own performance long term. If you're very serious about growing an account, depositing is absolutely one of the best ways. Focus on the skill, realistic plans for saving money, and growing the account over time. If you master the skill of trading, if you improve constantly in your trading, the long term will be better for you because, yes, you might not make a lot of money tomorrow, but what about 2 years from now, 3 years from now, when you're compounding and your growth is meaningful to your account? If you made it to the end of this video, comment down below. And those of you guys who do make it to the end of the video, you guys are the real MVPs. I love it when I see comments from you guys saying that you made it to the end. It really means a lot to me because I take a lot of time making these videos, and I just really appreciate those that, sort of watch the whole thing. So comment down below and I'll try and heart your comment. And I do want to wish you luck. I know that I've been a little bit of a bearer of bad news in this video, and I don't mean to sound negative. I'm trying to sound realistic. I'm trying to bring to life ways that you can really, really sort of make progress in this trading thing. Growing a small account, I'll be honest, it is not easy. And I really do hope that these tips help you because these are the best sort of things that I have to offer in terms of growing an account. I'm not, putting this behind a paywall. This is not a paid course. This is all free. I have nothing to sort of try and sell you with the tips that I'm showing you. My goal is to just share my thoughts on YouTube. Of course, I do make money on YouTube. I make, ad revenue and that sort of thing. So I'm not going to say I'm doing this completely for free, but this stuff is free to you. You may have to watch an ad, but my goal here is just to share good, valuable content so that you enjoy and keep watching my videos. That's just me being real. Trading is not all that it's made out to be. But it absolutely, with time and effort and to the patient people out there, it can actually be a very profitable venture. And again, I want to wish you luck with your journey. So thank you so much for watching this video. If you did enjoy, make sure to like it down below.